Hi there, I'm Tanisha Coffey, owner of the Lofty Entrepreneur and Rock Solid Financial, and this is the Lofty Entrepreneur podcast where business owners can watch or listen in for the very best tips, tools, and resources from high-level strategic concepts to getting in the trenches of how to generate more money, scale, grow, and protect what you work so hard to build. Now, today's guest is Mr. Roy Hudson, a CPA with over 20 years in both accounting and finance. He has worked for several industries and has found that regardless of the size of the organization, one thing remains constant, and that is for any company to be successful, it must have a holistic understanding of its financial statements. So we're going to delve into some of those topics tonight. Guys, help me welcome Mr. Roy Hudson. How are you?
I'm doing great. Thank you so much for having me tonight.
Absolutely, absolutely. So I know a lot of times when people are starting off, their new businesses, they're all about, the marketing, the branding, the
Mhm.
look, and all this, right? And,
Yes.
of course, they're thinking about it, start my business, but what they don't typically think about is the undertaking of managing the financial side of it, right? So,
Yes.
obviously there's, the I want to talk a little, break some of those phases down, right? So we have
Mhm.
like the accounting, the bookkeeping and accounting, and then we have,
Right.
some of the things that people should know about taxes. So first, can you talk a little bit about some of the accounting things that people should set up from the beginning, and then we'll dive into some of the
Yeah.
other topics.
Certainly. So, first of all, with any business, especially when you're dealing with the financials, the foundation of it is the bookkeeping, because the bookkeeping or the bookkeeper or the accountant, what they're responsible for is to record all the accounts of transactions. They're also making sure that the business has accurate, up to date financial information about their business. It allows them, the business owner, to build budgets to identify trends. And also, they just have precise and transparent financials, because a lot of businesses may need that when you want to meet with investors. They definitely want to see your financials and make sure that they're accurate. Also, when it's time to file taxes, you definitely want to make sure all your financials are in order, and also for budgeting. So I would say, first of all, from a financial standpoint, you want to start with the foundation, which is having a bookkeeper or an accountant to provide you those most important services for accurate financial information.
Right. And then you mentioned one thing. Obviously, people know when you make money, the government's going to want their cut. So thinking about those
Hmm.
taxes. Now, as an individual, you only are responsible for paying taxes for the most part,
Right.
once a year. But go
Hmm.
ahead and explain kind of, what new business owners should expect when it comes to those taxes, how they should kind of set themselves up for being
Yeah.
responsible in that way.
So depending on your business, if you want to be, if you're a Schedule C or a LLC, you're gonna want to pay quarterly taxes. What happens at the end of the year is that when you file your tax returns, there's an employment tax that the IRS is going to charge you on. So you got to pay taxes on that. You want to pay quarterly taxes because also you want to make sure that you're not incurring any penalties or any interest on any unpaid taxes. So as an LLC, as a individual or a solo business owner, you want to pay those quarterly taxes for your business. Now, there are some business owners that are moving to a S corp, and an S corp is different from LLC, because with the S corp, you can become an employee of the company. With an S corp, if you're an employee of the company, you have your W-2s. So the business now has to pay taxes, federal taxes, state taxes, unemployment taxes. You still want to pay your quarterly taxes as a employee of the business. So as a business owner, these are a lot of things that, this is the reason why a lot of business owners should have a CPA, because they will help you through that process of, when to pay my taxes, how much do I need to pay, what is the estimated amount of taxes I would pay next year, so you can make sure that you're paying the correct amount of quarterly taxes, or a good estimate of your quarterly taxes. So I would say, if you're a business owner, get with a CPA so that you can work to learn about your taxes, or have them basically do your taxes to help you through that process.
So I want to tap into this a little bit because you mentioned about some of the
Mhm.
different structures that people can have for their business: sole proprietor versus LLC versus an S corp and then corporation, right? So
Mhm.
from
Yeah.
a tax perspective, right? And from a tax perspective, just can you quickly identify a few of the differences that the advantages and disadvantage, maybe one or two of each, as an
Mhm.
individual, this is the tax advantage, this is the disadvantage. And then for like the
Yeah.
LLC, and so on.
Right. So with the individual, you will, or LLC, you have to pay those employment taxes. I believe the percentage, I think it's 9%, but there's a percentage of employment taxes if you have to pay if you are a sole proprietor or an LLC. Now, with when you become an S corp, you don't have to pay those employee taxes. So that's an advantage of switching to an S corp. Also, and with the S corp, a lot of times you want to have a certain amount of income, maybe 100,000 or more. But also with the S corp, you are now allowed to, and you can do this with the LLC as well. But you can put some of your money towards an IRA or some kind of investment vehicle, so that way it can lower your taxes, as well as you're putting your money away to something that can grow financially in the future. So you're not paying the government any taxes, but you're not also just throwing your money away. You're putting it towards something that can grow your business. So those are the advantages of being LLC as well as the S corp. I would say the big disadvantage, of course, is those employee taxes, the LLC. That's why a lot of times when companies make a certain amount of money, they move over to the S corp because they see more of those advantages of being a W-2. You can take distributions that you're not taxed on, and that's based on a number of things. But there are distributions you could take and not be taxed on it. So there's so many advantages to switching over. And that's why I said, get with the CPA so that you can see what the advantages and disadvantages are of being whether a sole proprietor, LLC, or S corp.
So let's talk about, very good. Thank you so much. All right. So let's talk a little bit about some of the strategies you kind of mentioned, right? So, I'm
Mm-hmm.
a strategy girl, love, figuring out different ways to kind of help business owners to do things that they may not otherwise be able to do. Or I should say, they could do them, but maybe the traditional routes are not the way to go, right? So when you're thinking about, say, a business owner that is to scale, right? They're trying to scale up. They need a growth spurt.
Mm-hmm.
What kind of situation, what kind of tax strategies, and this may be too broad of a question, what kind of tax strategies would you say they would begin to try to implement to help them with their ability to, maybe free up some more cash in order to be able to do things?
Uh, from a tax perspective, that's a good one. As a business owner, you're quite, I see as a business owner, some ways you can free up some cash. Um, I think, outside of lowering your taxes, like I said, if you were to lower your taxes and by putting towards, say, like I said, a IRA or something like that, that could free up some money on the back end for you, but especially if you're an LLC. So what happens is it lowers your taxable income, and now you're not paying as much in taxes. So now that's more money you could keep to your business and grow your business more. So that's one way I will look at. That's one thing I will look at as a business owner if you're LLC or sole proprietor, to free up some cash. It's definitely trying to lower that taxable income so that you're not being taxed as much on the back end, and you can serve some of that money for your business.
Right, right. Um, I know it's not necessarily your, well, I don't know. Have you ever
Mhm.
worked with some business owners who are using some insurance strategies as part of that, like using, say, like an executive compensation plan type thing,
Mhm. I
insurance
I
based?
have not.
Okay.
Yeah, I have not. My business, the business that I worked with, I've worked with one as an S corp, a lot of them are LLCs, but they are not using those insurance services. I do say, with my clients to work with a financial planner, to work with an insurance person. One of our main clients right now, she does have a financial planner that can help in those services. I'm not as equipped to help with that information. So
Right,
with our company, especially, we want to ensure our clients, we're not going to promise you that we can do stuff that we can't, and we're not
right,
going to
right,
try to
right,
advise you on things that we're not certain about. But like I said, I have not worked with a client like that.
right. But what I want to say, I want to kind of segue this over. So, one of
Hmm.
the main services that you guys offer is as a fractional CFO. And
Yeah.
so I want you to kind of explain that, because it's gonna, stick with me, people, listen, because it's gonna kind of combine with some things he was saying before about some of the strategies and things that you may want to do for your business. Your financials are everything. Your financials are a huge part of what determines your business's worth, not only to yourself but to others. And as that means that it is an asset, that information is an
Mhm.
asset to you. And so we're going to dive a little bit into that, but I want you to help them to understand this notion of a fractional CFO, because I
Yeah.
feel like too many business owners have no clue what it is, but they desperately need it, even more so than just
Yes.
having, a bookkeeper or having an accountant kind of dip in every now and again. So can you explain that?
Right. Definitely. So for people who don't know, CFO is Chief Financial Officer. That's what the initials stand for. So you've heard of fractional CFOs, you have outsourced CFOs or virtual CFOs. So what a CFO, they basically have a high level of financial expertise, and they assist the business with their strategic and financial decisions. So they'll partner with the company to help overcome financial challenges, optimize the strategy, and achieve growth. So the responsibility of a CFO is to basically track the revenue, the profit, and cash flow of a business, because you want to look at those three things. You want to know how much money you're bringing in, right? How much revenue you have. But not only that, you want to see how much is actually going to the bottom line, how much is going into your pocket. And then you want to know how much cash does the company have, because you'd be doing great on the income statement side with your revenue, but how much cash does your company have? It's very important, because you want to see things such as how many months do I have of cash to cover my expenses? If my business were to slow down, if production had to stop, how many months will I have of cash to cover lights, rent, salaries? You want to have that information, and CFO can help you with that. Also, what a CFO does is they're going to analyze the company's financial strengths and weaknesses. Where are you successful at? Where are your challenges? Okay, where are the holes in your business? They're going to help you understand and analyze that, and help you to correct any issues that your business may have. And most importantly, they're going to propose corrective actions. What changes do you need to make in your business? Like, once again, your revenue is high, but your cost of sales, your expenses are high as well. Why are they high? Do you need to change your vendors that you're getting inventory from? So they're going to help a business owner look at all of these factors in their business and help them to grow their business. Now, as a result of everything that the CFO does, the business owner knows exactly what to focus on financially. They're going to know what changes they need to make. Like I say, if it's cost of sales, if it's inventory, what changes do they need to make financially for their business? They're going to understand the financial health of their business also. How well is my business doing? Are we going to be able to make it through the year? Are we able to make payroll next month? Having this information is detrimental and for a business owner. And not to mention, when you have a CFO working with you, you're no longer in it by yourself. You're not worrying about the business. You're not waking up at 2 a.m. in the morning. Oh my God, where's my business going? You have someone there that you can reach out to that can guide you and give you that understanding. You know, um, a lot of businesses, they would just have a bookkeeper. And like I said, bookkeeper is very important. But what a business owner has to understand is that a bookkeeper is reaction. They're reactionary. So you're looking at things that happened in the past. You're looking at your financials, something that happened last month. I equate it to taking a trip, a cross country trip, and you have two people in the vehicle with you. You have your accountant or your bookkeeper that's told you how much you spent on gas, how much you spent on food, but you also need to, that's not the whole trip. The other half of the trip is how much do you have left? How are you going to make it to your destination? How much money do I have left? How am I going to budget the gas, the food for the rest of the trip? And the CFO is there to help you with that. Same thing with your business. Your bookkeeper is giving you your foundations. They're telling you where the business is at currently or where they're at last month. Your CFO is going to tell you how you're going to make it the rest of the way. How are you going to make it to the end of the year? Or how are you going to make it for the next 5 years? So that's why it's very important for a small business to have, as I stated, a holistic view of their financials, from the foundation of the bookkeeping to going forward with the CFO.
So I think that's hugely important, because again, my favorite thing out of what you just said is with the bookkeeping and accounting, it's tracking, where you are at a point in time. And, with the bookkeeping, it's what's already happened. But then the
Right.
notion of actually thinking about your financials, again, from a strategic standpoint, and saying, okay, let's actually analyze. That was the key phrase that I pulled, from kind of the CFO, position, is the analyzing of what direction do you take next. I mean, a lot of business owners
Right.
do it already through, like their marketing, or if they're just looking at the sales. But when you start to look at it overall, I think
Yes.
that's hugely important.
Yes.
Sometimes I'll work with, business owners who are, needing to get, like they want lines of credit, or they want loans,
Hmm.
right? So
Yeah.
sometimes it's going the traditional route may be a smart idea, but sometimes
Mhm.
going a non-traditional route may be smarter based on your financials, right?
Right.
You may not be able to,
Exactly.
sustain a loan in a traditional way, that it may be
Yes.
presented to you. And so I think that's great information to have, when
Yeah.
it comes to that. Um,
Yes.
what,
Yeah. And that's why we say we're looking at that cash flow is very important, because that cash flow statement will show you that it's looking at your revenue and your payables. So once again, as you stated, if you have a loan, how much of your cash is truly the loan amount? How much is that is infused money from a loan? And once again, once you have it, and you analyze that and say, well, this is how well my company is doing. We yes, we do have 100,000 in cash, but 50,000 is related to a loan. And so, what's going to happen with that loan money? How am I going to produce more money from that loan? So, once again, you want to have that strategy down pat, and that's why you want to have that CFO to help walk you through the next month, the next 2, 3 months, and throughout the year.
Mhm. Absolutely. So I want to talk. So we talked about starting the business, right? What people need to be thinking about, from a financial
Mhm.
perspective. We just touched upon as you're moving along, through the business. Let's talk about when you're ending the business, right? Because a lot of
Mhm.
times people, again, they romanticize the starting of a business and, all of this, and they don't really
Mhm.
think about the end game. And I
Yeah.
know particularly, when people are trying to sell their business, right? Those financials
Yeah.
are a huge aspect of that. So,
Mhm. Right.
um, let's talk a little bit about some things that would indicate a very strong business financially, that people may want to strive to have, or strive to achieve, if their goal is, in 5 years I want to go ahead and sell my business, kind of thing.
Okay, so you definitely, when you're looking at your financials, when you're looking at your business, depending upon the business that you have. So every business is different. A lot of things people look at is your gross margin for your business. So basically, how much of your revenue is remaining with the company. Now, everybody's business is different, so you don't have a standard gross margin for each company. So you want to be able to ensure that your company is sustainable, it is scalable, and that you're seeing those returns on a monthly basis. Whether, like I said, if you're looking at your gross margin, if you're looking at your cash flow, and you have enough cash to sustain your business. Now, you want to make your present if you plan to eventually sell your business. You want to make it presentable to the next someone that wants to buy it. So you want to show that your business is successful, that it is bringing monthly gross margins, and you can provide those monthly profits that they will expect to receive. And that way, that can help you value your business as well. If I want to sell you a business of mine, and hey, this is how much we make a year, this is where you're standing to gain for the next few years. Then this is where I propose to sell my business to you for. So you just want to have a healthy income statement. And when your income statement, that's your revenue, your expenses, your profits. So you want to have a healthy income statement, positive returns every month, or sustainable returns each month. And also on the cash flow side, sustainable cash flow. You want to, I prefer to people to have enough cash to cover anything that may come up. Because once again, you may need to buy a new asset for your business. You may need to, cover expenses for a few months if things slow down. But you definitely want to have a healthy cash flow as well for your business. So I would suggest to any business owner, when you're looking at your financials, look at it in total. Just don't look at the income statement and look at, hey, look at my revenue. Look at the bottom line. Where's that profit margin at? Also, where's your cash flow and how healthy that is? Because that'll determine the value and the success of your business. Oh, you're on mute. I can't hear you, Tanisha. I'm sorry.
Sorry about that. And I wanted to kind of,
Yeah.
chime in on that because a lot of times, many small business owners, especially the, solopreneurs and things like that, um, they kind of keep to themselves on, the financials, the things that are going on because they're thinking, oh, it's just me, right? But the reality
Hmm.
is whatever
Yeah.
business you're building, no matter how large or how small you are, it does have value. And so, those
Hmm.
financials really can help to make a difference between you saying, oh, I'm just going to shut my business down, because I'm done, I
Hmm.
don't want to work it anymore. And you having the ability to, connect with a business broker, to say, hey, let's see if anybody's wanting to take over this, this practice, this clientele. And so those financials can play a huge,
Yes.
huge role. And so, it's I won't, depending on who you talk to, it may not be the sexiest of subjects, related to your business, but boy, oh boy, if
Yeah.
somebody starts offering you that right money, simply because you've tracked your things and
Right.
you've done it right, it'll become a lot more
Right.
appealing then, I would think. So,
Yeah. And I've read before when you get into a business. Oh, I'm sorry. My
no, no, no.
apologies.
You go ahead. We got a delay, so you go ahead.
Oh, no, I was just going to say, I've read before when you start a business, you should always think of your exit plan. That's the main thing. And I think a lot of times when you start a business, you're just thinking about running the business. But, your goal is what is the end result? What is the end game here with this business? Do I expect to run this, forever? It could be a family business going forward. Do I want to pass this on to my children? So basically, just thinking about that end game is very important because that'll also help you to devise your plan. Hey, what do I want to do next year? What do I want to see my business at 5? Do I want to be in this 10 years from now? If I just want to sell this business in 10 years, what do I need to do to get to that point where I can sell it, I'm profitable, I can sell it and live comfortably for the rest of my life. So you want to start building that plan and definitely think of that exit plan or where do you expect to end your business? And my wife and I talk about it as well. Where do we see this business going? It depends on what our children do. Our kids are 12 and 9, so they still got a few years to go before they decide what they want to do. But we do want to think about that end game. Do we eventually want to sell it? I met a person that told me he just sold his business. He had a tax business, but he was like, "Hey, there's my end game. I was ready to sell it. It was doing well, and so he sold his business." So I would think for any business owner, when you get into business, think about that end game. What is your exit strategy? What is your end goal for the company?
Right. So I want to, because I think it's, first of all, kudos to you because it is very tough, I think, for a lot of people to run a business with their spouse. So,
Mhm.
definitely
Thank
props
you.
to you guys. Um, I
Thank
go
you.
ahead and tell everybody about, talked a little bit about some of the things you do, but I want
Mhm.
you to go ahead and describe, kind of how you guys work and things of that nature, and how people can get in touch with you if they would like to speak with
Definitely.
you about maybe the fractional CFO services or anything else you have to offer.
Okay, yes. So the business was started by my wife, McKenge Hudson. She started the business a few years ago, and she always had an entrepreneurial spirit. Her family she has a number of family members that are entrepreneurs, and she's always had a love for numbers. She's a graduate of Florida A&M University. Go Rattlers! I have my green. I don't have the orange on, but go Rattlers! But she's always had a love for numbers, and she was a stay-at-home mom, but she wanted to show our sons that what a woman can do, what mom can do. Mom is just not mom around the house that, takes them to school, drops them off. Mom, she owns her business. She's a co-president of the PTA. So mom does it all. Mom's bad. Mom is bad. She a bad mama. So, she started the business and she just offered the bookkeeping services because that's what she was doing. I in turn came on board to do the CPA as a CPA, but to do the CFO and tax services. So the way our business works is my McKenge, she is over the bookkeeping part of the business. She's QuickBooks certified. So if any person comes to the company, if they need QuickBooks setup, she can set people up in QuickBooks. If they're using QuickBooks and need help with it, she does QuickBooks cleanup. She runs payroll. So she handles the bookkeeping side of the business. I run the CFO and the tax services. As I said, my experience throughout my career over 15 years of accounting, I spent the first half doing accounting and the second half doing the finance or the CFO business, building budgets and forecasts for businesses, as well as doing taxes for many years. So the way to run a business, once again, she's over bookkeeping. I do CFO and tax. The way our business works, we're a la carte. If you come to us and say, hey, I just need a bookkeeper, then we'll provide you those services. If you say, I have a bookkeeper, but I just need CFO services, great. If you just say, I need tax services, whatever it is you need. For taxes, we do it for both businesses and individuals. So the way the business works is, once again, depending on what you need, you can reach out to either of us. Our website is hudsonas.com. My email address is roy@hudsonas.com. And my wife's email address is mckenge@hudsonas. And I'll spell her name because I'm pretty sure that'll be a guess. But her name is MKANEGHAY @hudsonas.com. So you can reach out to either one of us. Please visit the website. If you go to the website, we have all of these services that we offer. And if you want to schedule time to speak with us, if you have questions, if you're thinking about the services that you may need for your business and want to learn more about it, please reach out to us at our website.
All right. Very good. Thank you so much. And for those of you listening in, keep in mind, if you need help with any of your, business strategic planning, you can catch up with me at theloftyentrepreneur.com/discovery call. But meanwhile, if you guys are thinking about some of the financial strategies that you may want to employ to kind of help you along, particularly with the cash flow of your business, give you a little bit of surge, then visit me at rocksolidfinancial.co/business. That is .co, not .com. And I'm happy to speak with you. All right, guys, that is it for tonight. I want to thank you so much for joining me, Roy. I truly appreciate you. It's been very cool speaking with you. And I know that people listening and watching are grabbing some great nuggets. And guys, you heard him. Get your financials together. I don't care what they look like right now. Nobody has to know if you've been doing it on your own. Just start from today. Get it together. Because at the end of the day, those financials will help you as the business owner to know how you can be doing better for your business financially. And then down the line, it gives you options. It's good to have options if you want to sell or invite investors to, into your business. So really get those together. Hugely important. And then be sure to reach out to Roy and McKenge to help you. Thank you, Roy. I appreciate you. Till next time,
Thank you so much for having me once again.
You're welcome. Oh, be sure to like and subscribe, guys. Talk to you next time. Bye.
Bye.